Hello and welcome to the What Mortgage Show. I'm Stephen Little. There's been a recent dip in house prices driven by the growing squeeze on household finances and affordability constraints. But are we about to see property prices come crashing down? Today I'm speaking to David Hollingworth from mortgage broker London and Country about what is currently happening in the housing and mortgage markets. David, welcome to the show.
Thank you.
House prices have recently fallen and growth is currently at its lowest in 4 years, according to Halifax. Is this just a blip, or are we about to see house prices come crashing down?
We're still seeing some conflicting data. 1 month, a little bit increase. Another month, some indices are saying they're coming down. But it definitely feels like maybe the tide's beginning to turn a little bit in terms of house price growth. Although it's still worth noting that it is growing. The annual rate is positive. But I don't think there's likely to be a crash just yet, as many of the indices point to the low rates that are available on mortgages and the lack of supply of property to buy is actually propping those prices up. So at the moment, maybe a plateauing, and there could be some room for some prices to just come off a little bit. But at the moment, it still looks likely that we'll see positive growth just at a lower rate.
And what about the property market in London?
So London, actually, we're starting to see prices there flatten off more than elsewhere in the country for the first time. We've been so used to London prices rocketing higher and higher. But I think affordability's got to play a part here, and some people will be struggling to meet those high house prices. So perhaps just a bit of an evening off will give some people time to catch up with those prices.
Are we likely to see the Bank of England raise interest rates this year?
Well, it's been so low for so long that we've been talking about, could rates go up? When will they go up? They're bound to go up. And of course, all that's happened is actually base rate came down a year ago. So this talk is still, when might they rise? Inflation is above target. Normally base rate might increase to try and hold that off. But of course, inflation is actually higher than wage growth at the moment. So the concerns will be that there's a bit of a squeeze on household budgets at the moment. So I think it's far from cut and dried, although there is a bit more heading towards the fact that in the nearer future we might see a base rate increase, but it is going to be slow and gradual even when it does come.
How are mortgage lenders likely to respond?
Well, the interesting thing with mortgage rates is that they can actually respond before rates do anything. So fixed rates can see increases if the markets are expecting that base rate will rise sooner than they previously anticipated. Then that can feed into lenders' cost of funds, and therefore you can see an edging up in fixed rates. However, at the moment, funding is not an issue for lenders, and we're still seeing lenders cutting rates. It's so competitive out there that lenders are looking to attract borrowers. And we're far from seeing rates increase at the moment, but it could come.
How is a rate rise likely to affect borrowers?
Well, some, of course, will be insulated from any increase if we do see one, because they'll be on a fixed rate already. Fixed rates have been very popular because they are just so competitive and so low that people can be cutting their monthly payments, but also protecting themselves against future rate increases. Those on variable rates, however, could expect to see their payments increase because lenders are likely to pass on any base rate increase in those variable deals.
What advice have you got for borrowers?
Well, anyone who's anxious about that rate outlook, look around at the mortgage rates at the moment. They are extremely low. Many of them are record lows. So you can actually review your deal, shop around, get a better rate. So you could be cutting your payment, but also insulating yourself against that so you protect against future rate rises. So you could be saving now and potentially even more in the future.
Well, thank you very much for joining us, David, and thank you for watching.